So Dan, I think you have a confluence of things. We've got base effects coming into effect. Of course, we've got slowing domestic demand, which will mean that disinflationary pressures will likely take additional hold. And I think there's been a lot of pressures on sticky services inflation, but we've got those numbers coming down somewhat. And so I think with that 40% increase in base rates that we've seen over the last 12 months, I think that will really start hitting the consumer. And I think growth projections are likely to ease. We've got growth at 2.7% this year, so meaningfully lower than last year and a little bit below consensus. And so I think that will help the central bank to maintain rates. And I think going into the first quarter of next year, that's when we price the first rate cut, when there will be that meaningful disinflation likely materializing towards the end of this year.
Lira at 32.90 against the greenback. Is the lira trajectory also supportive of the disinflation trend?
I think so. I think, on net, Dan, we are quite bullish on the Turkish lira for many factors in place for the currency to perform well on a total returns basis. Of course, monetary policy is very tight, 50% on the one-week repo. We've got deposit rates on the lira accounts remaining very high. And, we've got inflation, as we mentioned, likely have peaked in May. And so, as this inflation starts to kick in, I think real rates will turn even more lira supportive. And so we do maintain a long-standing constructive view on the currency. Although, with that said, we do believe that it is important to not overlook the lira's appreciation in terms of the real terms. And indeed, the central bank has been quite clear that FX appreciation in real terms was a very key part of its overall strategy to bring inflation lower. But we would say that the extent of the appreciation also has to be considered, as it may adversely impact the economy via, of course, the uncompetitive exports and cheaper imports.